All right, so the first thing we have to take care of is that where we are entering into 15-minute trades, but most importantly is that where we are not entering into 15-minute trades. Because the last thing you want to do is to randomly jump on 15-minute opportunities everywhere without following the higher time frame 4-hour trend. This is the last thing you want to do. It will mess everything up. It will take you into lots of drawdown losses. And once again, this is the last thing you want to do. But what you want to do right here is to align the 4-hour flow, the 4-hour trend with the 15-minute flow. And in this case, when, for example, the 4-hour time frame is moving in the clear trend, where it's creating a bullish or a bearish trend, higher highs, higher lows in case of a bullish trend, you want to line up that 15-minute trend with this 4-hour flow. And in this case, you can look for perfect opportunities with three type of entry models. I'm going to break down all the entry models later in a second video. But here, what we are talking about is to lining up the 4-hour time frame with the 15-minute one, because this is once again the key element of this strategy, of this 15-minute scaling strategy. Because if you are just randomly opening trades on the 15-minute time frame, once again, you will be in drawdown. You're going to lose a lot. If you're entering randomly when you have a clean trend on the 4-hour time frame, let's just assume that we have a bullish trend right here. You are entering randomly on the 15-minute time frame without taking care of the 4-hour one, you're going to end up finding yourself in situations when there is a bullish trend, when their price is moving to the upside, when there is clean series of higher highs, higher lows, breakout structures, you're going to end up in a situation where you're going to force short reversal trades on the 15-minute time frame. For example, in a movement like this, or for example, in a movement like this, where the 4-hour is clearly heading to a bullish direction. The last thing you want to do is to force yourself into reversal 15-minute opportunities right here. No, you don't want to do that, because most of the times this will be a fake out. Most of the times this will just only grab liquidity of the retail traders, your liquidity, if you are randomly opening trades on the 15-minute time frame without taking care of the 4-hour flow. And without further ado, it will collect the liquidity and will continue into the main direction. But how can we actually utilize on this 4-hour time frame with the 15-minute time frame's help? It's really simple. We have to take care of where price is heading. As I told you before, we are looking at trends. We are looking for a 4-hour direction where it's moving to the upside. Okay, that's clean. We see a bullish trend right here, series of breaks, series of higher highs and higher lows, series of breakout structures, moving upside. We just identify this and we know that price is heading to a bullish direction on the 4-hour time frame. How do we scale in? As I told you, we have three entry models. First entry model will be a confirmation, second will be a reversal, and third will be a confirmation. We will use these three type of entries in three different situations. So first of all, what we have here is the three entry models. Let's just assume that we have bearish trend on the 4-hour time frame. We are moving clearly to the downside. We are creating some protected high points, for example, right here. Price swept down this previous high, and from this sweep, it went down to break the external low, to break the low point of the 4-hour time frame. Yeah, in normal circumstances, we will use the 4-hour entry model, which we will do still. We will pull the Fibonacci from this high point down to this low point, and we will enter on the 71 level exactly right here on the 4-hour time frame. But this course is not about the 4-hour time frame. We know everything about it, right? This is about how can we scale in on the 15-minute time frame. And it's easy. Once we identify the trend, once we have the 4-hour opportunity, which we normally enter into, we have three opportunities to actually utilize on the 15-minute movements. And once I told you, first it will be a reversal when we have an external break or any type of break on the 4-hour time frame that lines up with the 4-hour trend, with the bearish trend. We will be looking for reversal trades on the 15-minute time frame. The logic here is simple, right? We are assuming that price will come back up to the 71 level here. We will enter here and we will expect price to drop down into our TP right here. If this is the logic, we are expecting price to come up to the 71 level and to tag us in right here and to enter there on the 4-hour time frame. We know that price will come up there. We know that price will most likely pull up there because this is a protected high point, because this is a really strong support level where lots of liquidity is resting. This is a protected high point, broke the structure, volume is there, order block is there, all the criteria we need is there. So we know that price most likely will retrace back up there. So we can utilize on this by taking reversal entries on the 50-minute time frame like this. We are looking for reversals on this deep end, and we are looking for the exact same criteria as on the 4-hour time frame. We are looking for reversals coming back up to the 71 level. So this will be the first trade we are looking for. The second trade will be the confirmation of the 71 level, or not just the 71 level to be precise, it will be the confirmation of the discounted area. In the next video, we will talk about what premium and discount is, but we will be looking for the confirmation of the discounted area, where we are originally looking for a sell on this 71 level. We have a direct limit order here. We are entering here on the market, but we are waiting for a confirmation as well. We are waiting for the 50-minute time frame to line up once again, to align with the 4-hour time frame. And in this case, when the 50-minute lines up with the 4-hour flow, it will mean that most likely it will drop down to the 0 level of the Fibonacci and will hit the TP of the 4-hour original and the new 50-minute scaling opportunity. So we are looking for confirmations around the 71 level. Don't worry, all of these entry handles will be explained later in a separate video. So first of all, looking for a retracement, coming back up to the 71 level. Secondly, we are looking for a confirmation around the 71 level, or to be more precise, in the discounted region. Okay, that's fine. We just took a reversal trade coming back up to the 71 level. We just entered here on the 4-hour time frame, and now we confirmed it, so we are in 2 trades. What else we are looking for? Because I told you that we are looking for 3 types of entries. That is the continuation entry. Because we know that we are entering here on the 71 level, and we have already confirmed it, so the time frames line up together. All the time frames, the 4-hour, 50-minute, are lining up together because we have this nice bearish flow. Price just came back up here. It just made the confirmation. The structure shifted back to bearish on the 50-minute one because this is how it retraces on the 4-hour, right? So here at the 4-hour deep bottom, this is the 50-minute flow. This is how it will retrace. It will form an individual bullish order flow coming back up to the 71 level right here. So when this all aligns together once again, price shifts the market structure from bullish to bearish, there will be the confirmation which it will take. And here comes the continuation, because here in this movement, you can scale into other opportunities, because you know that the 4-hour is lining up with the 50-minute, or to be more precise, the 50-minute is lining up with the 4-hour. So the confirmation, the market structure shift has already happened. Price is moving into the bearish direction again on the lower time frame, on the higher time frame. Most likely this external low will be broken. So what you are looking for here is simple continuation trades where you are looking for the sweep of the previous structure, in this case this high point, and then the break of the low point, and you are looking for scalings on the 50-minute time frame. And here comes the juice. Here comes the big juicy thing, that we are not going to cut the winners. We are not going to cut the wins, because we are going to target the external 4-hour structure with all of the 50-minute entries. To be more precise, with the confirmation and with the continuation, the reversal is a bit different. I will explain it later. But we will not cut the winners. We will be looking to target this level, and we will take some partials on the way down as well. So this allows us to actually take really high risk reward ratio setups, not just talking about the 2.5 risk reward ratio or on the original 71 level here, because from this 71 level down to the 0 level, it's 2.5% or 2.5 risk reward ratio. That's pretty clean, right? I'm just telling you that the confirmation and the continuation won't happen all the time. It won't. So that's why we are still using the 4-hour entries, because if you can't utilize on the 50-minute time frame because the opportunities are not there, price is not showing the confirmation, price is not showing the continuation entries, we are still in the 4-hour trade. We are still making a nice amount of risk reward ratio, nice amount of money with that 2.5% profit. Yeah, that's clean. But this 50-minute model or 50-minute models allows us to actually utilize on that 4-hour movement with higher risk reward ratio trades. Because if we catch a trade on the reversal side, you're going to enter here and you're not going to cut your win on the previous 50-minute low, on the previous 50-minute zero Fibonacci level right here. You're going to let it run all the way down to this point, all the way down to the original 4-hour structural point. And this is the key. And you're doing the same stuff with the 50-minute continuation, where if price sweeps out the high point, for example, just imagine it sweeps out the high point here, breaks a low, you're going to enter here in a trade again, and you're not going to cut that win here at the previous external 50-minute low. You're going to let it run down to the 4-hour external structural low, exactly right here. And with this type of trading, you can utilize on the 4-hour movement completely by taking 50-minute scaling entries, because you already know that where the 4-hour time frame is heading. You already know that it's moving in a bearish direction. And with the 50-minute time frame, you are scaling yourself in, leveraging yourself into higher risk reward ratio positions. And let me just warn you, because this is a really important thing. I have to warn you about. Lower win rate can be expected, because the lower the time frame is, the lower the win rate will be. The higher the time frame is, the higher the win rate will be. So, what does this mean? It means that on the 50-minute time frame, you will take more losses. You will take more losses. You won't have a high win ratio. No. Some of the opportunities will sweep you out. Some of the opportunities will hit your TP. Some of the opportunities will hit your break even. That's how it works. The higher the time frame is, the higher the win rate is. The lower the time frame is, the lower the win rate is. So just keep this in your mind if you can handle trading like this. And speaking about another thing, once I told you in the introduction, this won't take much more than 1 hour of your time a day, because we are looking at the 50-minute time frame still. A 50-minute opportunity takes like few hours to form. Just imagine that one candle on the 50-minute time frame means 15 minutes. A setup usually takes like 10 to 30 candles to form. Just multiply that up by 15 minutes, right? So it takes few hours to form. You just simply set alerts. You just simply set alerts on crucial points where you're expecting a sweep, where you're expecting a break, or a sweep is already there. For example, here on the confirmation, the sweep is already there. You set an alert on the break. If it breaks, price comes below, you will be notified by your phone that, hey, yeah, price just came below the breakout structure line. And in this case, all you have to do is just set an alert on the retracement. So if, for example, price retraces back up, you will be notified that, yeah, price now just retraced, so I can set the limits here on the Fibonacci level. So it won't take more than 1 hour of your time a day to trade on this model. And you can still trade by your job, still trade next to your job. But the main topic of this first video is not to talk about that, how much time is going to take, how much time is going to waste of your time. No, it's about the 4-hour alignment. So this is one really crucial thing that you have to focus on to find the 4-hour flow. How can you find the 4-hour flow? How are you finding that where the 4-hour is heading? With the 4-hour model. And this is why I told you that the 4-hour time frame model, the 4-hour entry strategy, the 4-hour time frame mystery is crucial to be learned and to be understood in order to trade on the 50-minute time frame. Because everything that is written down in the 4-hour time frame mystery book shows you that how to follow the 4-hour trend. Because in 99% of the time, we are trading based on a trend or based on a reversal on the 4-hour time frame. So you just simply apply the principles of the 4-hour mystery strategy book, the 4-hour strategy, apply the principles, and you will know that where price is heading. You will be able to identify the market structure. You will be able to identify that what the direction on the market is. And obviously, you have to learn this. First of all, you have to learn the 4-hour book. Then you can switch off to this course. So once again, if you haven't learned properly the 4-hour time frame strategy, go back and learn it, because you won't be able to scale in on the 50-minute time frame without doing that. So understanding the 4-hour time frame is crucial. We already know how it works because we have learned this strategy. You know how it works. Now we can scale in with these 50-minute opportunities. But once again, backtesting is crucial to understand where price is flowing, where price is heading, to actually catch these entries. And in the upcoming models, I'm not just going to talk about the theory that how we are going to be able to scaling right here, what we are going to do on the concatenation. I'm going to show you raw examples that what this is made of. I'm going to tell you that how we are entering in all of these three types of entry models, what is premium discount is, what Fibonacci tools are we using, what more elements we are adding. We will show you this. I will show you this. And now let's just end this video because there's no point of speaking more about the 4-hour time frame alignment because it is written down in the 4-hour time frame mystery book. So please, once again, just study that book. And once you studied it and understood it completely, you can come back to completing this course. So see you in the next video, guys. Cheers.